So this article, as well as a series of associated tweets, really caught my attention because it's one of those things that sounds, boy, high finance and money laundering rules and tax rules and countries being blacklisted and referred to as financial havens and so on. But this is something that for some time now has been affecting countries in the Caribbean. Ms. Dukaran, thank you so much for talking to us.
Hello, good afternoon. Sorry, I dropped off for a second there. The call
That's
dropped. My
okay.
apologies.
I know. Telecoms issues, we all have them.
Yes, yes, yes.
Glad to have you on. So I was telling my listeners before you came on about your article, and we heard a little bit of Prime Minister Motley speaking on Sunday. So
Yeah,
let's back up a little bit, if we could, and ask you to
sure.
give my listeners a little bit of a background in terms of
Right.
your concerns and where they're coming from.
Well, the first thing I think it's important to note is that there are actually two lists. The list that was published today is the list that was called the EU's, they called it the blacklist. They gave it that name, where they listed countries that they deemed to be non-compliant with the EU's tax um, standards and rules. Now, there's another list that came out on October 1st, and that list was about the EU's anti-money laundering and combating the financing of terrorism rules. So there are two lists, okay? So one relating to tax and one relating to AML, CFT, anti-money laundering. So the thing about these lists is when you look at the countries that are on these lists, every single country on both of these lists combined, and by the way, Barbados and Trinidad and Tobago are on both lists, right? The thing is, every single country was colonized or otherwise exploited by Europeans at some point in the past, or they are overseas territories, for example. So Anguilla is on the list as of today, the blacklist, and they are a British overseas territory. And every single one of these countries is a non-white country. So there is no white country on this list. And you will notice as well when you look at the countries that none of the EU territories are on this list. Why? Because these rules that they apply to us actually don't apply to the EU member states themselves. And when you look at the methodology that the EU uses, they also don't apply this methodology on these rules, I should say, to any country that is a significant trading partner for the EU. So when you think about financing terrorism, one of the countries you think about as being accused of this activity is Saudi Arabia, no? You will not see Saudi Arabia on the list because Saudi Arabia is a significant ally and trading partner for the EU member states. When you think about money laundering, we saw with the FinCEN leaks recently that London is in fact, or I should say the UK, is the largest money laundering center in the world. They laundered some $2 to $3 trillion, mostly out of Russia. And you would not see the UK on this list because, again, the UK is a significant trading partner and ally to the EU member states.
Hold that thought for
So
me
the
for
only
just a moment, please. I just have to go to the break, do a little bit of business of our own, and we'll be back. We're talking to Caribbean economist Marla Dukaran. She's raising concerns about how the EU administers and places countries on its various blacklists. Soon come. All right, thank you so much for staying with us. We continue to talk about concerns raised by Caribbean economist Marla Dukaran, writing in the Financial Times recently about EU money laundering and tax rules. Now, earlier this year in May, it had been revealed that Jamaica was one of the Caribbean countries that had been added to the EU blacklist of countries accused of being soft on money laundering. The finance minister, Dr. Nigel Clark, said at the time, told the Gleaner that It wasn't good news that the EU has blacklisted Caribbean countries, including Jamaica, Barbados, and the Bahamas, and he attributed it to what he called an arbitrary change by the Financial Action Task Force in how the size of a country's economy was measured. Well, as I said, we continue with Marla Dukaran, who is raising concerns of her own about how the EU administers its rules. And one of the startling things you were saying was that the rules that apply to us don't apply to EU member states or their trading partners. How is that? How is that
Well,
possible?
how is that possible? Because the EU just decided that they would come up with this methodology that does not include themselves, and they exclude their friends as well. How they are allowed to get away with it is what I think you really want to ask. And I actually don't know the answer to that except to say that the EU is so powerful. It is the most powerful trading bloc in the world. Their currency is the second most important currency in the world. And they are the largest exporter of manufactured goods and services in the world. So they are very powerful. And so even though the OECD and the FATF are the recognized international authorities on tax matters and money laundering matters, the EU just woke up one day and decided that they wanted to come up with their own methodology and their own list for adjudicating on whether a country has has sufficient or satisfactory tax and money laundering rules. Now, so that I think I really cannot answer your question as to why they get away with it, but they get away with it because might is right and they're powerful.
You just mentioned the Financial Action Task Force and the OECD, and a point you make in the article is, in fact, some of the countries that are regarded as either low risk or compliant by those institutions have been blacklisted by the EU.
Exactly. Exactly. So even when the recognized authority gives us a pass, the EU says, no, hold on. I will still blacklist you. Now, so when I first discovered this, I started because Trinidad and Tobago, where I'm from, and Barbados, where I live, are both on these lists. And so, of course, it intrigued me as to why were these countries on this list or these lists that the EU publishes. And so I started to dig deeper to try to figure out why would they want to do this? Why would they care about these tiny little countries that are insignificant on a global scale and insignificant to them? When I started to dig deeper, I discovered a couple of things. One, the EU itself as an institution, the European Commission itself, lacks diversity. It lacks ethnic diversity and gender diversity from the standpoint of the technocrats that work there. Okay, the level of diversity within the European Commission as an institution doesn't even reflect the diversity that exists in the European Union. Okay, it's much more predominantly white as an institution compared to what it looks like as a block, okay, of countries. So that's the first thing that set off alarm bells in my head that something's not quite right here. The other thing is that the EU itself has some problems with respect to its international competitiveness. Yes, they are the largest trading bloc and largest exporter of manufactured goods and services in the world, but they are actually relatively uncompetitive compared to the US, for example, in terms of taxation regimes and compared to Asian countries, some Asian countries, and even African and Latin American countries, because their taxation frameworks are actually quite punitive. And so what they found happening is that there have been instances of EU companies that choose to domicile in countries outside of the EU in order to benefit from their taxation, favorable taxation frameworks, and so on. And the EU doesn't like this because when these companies then move out of the EU and domicile, let's just say in Barbados or in the Cayman Islands or the British Virgin Islands, wherever, The point is that this is tax revenue that then the EU is losing. And they have quite a high level of fiscal spending that they incur on their social programs and so on. So they need more than anybody else, if you will, their taxation revenue to be higher so that they can afford the generous social programs that they run in the EU. So they are doing all of this, one, because they are trying to destroy the competition, but also because they themselves have some internal problems that perhaps they should deal with internal policy, but instead of dealing with it with their own internal policy, they export their problems by blacklisting us. Therefore, what that means is that they blacklist us, then these companies who would have preferred to domicile in, let's say, Barbados or Cayman because of the favorable taxation regime, those companies will now have to exit those jurisdictions. Otherwise, they cannot do business with the EU. That's what the sanctions for being blacklisting could lead to.
So you speak of the power and might is right and so on, but having said that, is there nothing that this bloc of countries can do that includes, as we've been saying, several Caribbean countries? When I'm looking at the list here that you cite in the article, the Bahamas, Barbados, Botswana, Cambodia, Ghana, Jamaica, Mauritius, Mongolia, Myanmar, Nicaragua, Panama, Zimbabwe, as well as Afghanistan, Iraq, Pakistan, Syria, Trinidad and Tobago, Uganda. I don't know this country, I have to tell you. I do not know that country. And Yemen.
Yes. Yep.
So is there nothing that can be done? Because we belong to a number of these international organizations of developing countries. Can none of them mount some kind of effective lobby against what is happening here?
Well, the thing is, there is no known formal recourse against the EU. Okay, so we appeal to the EU, and you would have heard Prime Minister Motley say that she wrote a letter to Chancellor Angela Merkel herself. So we are trying to comply, but we're also complaining. But the thing is, there is no international body, let's just say, that is formally dedicated to dealing with these matters. The United Nations apparently has some, I think the WTO itself or the UNCTAD, because they deal with international trade and so on, you can appeal to them. But it is a process that I suppose is not a formalized process, because the EU just woke up one day and decided some years ago to do this, and nobody stopped them. So, to that point about what recourse is available to us, I think that we can do a lot more as small countries, just like we band together as SIDS to appeal for climate action.
Yes.
Why don't we band together as blacklisted countries to appeal, whether to the EU itself or to the United Nations, for example, for some sort of redress? And I don't see that happening. And when I talk to, policymakers and so on in the countries that have been affected, and I ask questions, the thing that happens is when the EU fires its warning shot, as they did earlier this year, to say, I'm tentatively putting you on this list. You have to see what you can do. Come October, you're going to formally be on the list. That warning shot was issued in May or so, in the midst of COVID lockdowns. How many countries do you think were able to really respond quickly in a meaningful way? I mean, Cayman Islands was lucky, for example. They were able to respond and they got off the list. Now, the thing is, not every country would have been able to do that. Everybody had varying states of functionality and lockdown and shutdown and so on.
All right, before I run out of time, which I will in about 50 seconds, so having said that, do you think the kind of banding together you're speaking of, can that still happen effectively?
I think it can. The only thing that what I was going to say is what happens is everybody panics and goes off in their little corner and tries to pass their legislative amendments and do what they need to do to comply, and then they forget to jointly complain. And so while they're trying to comply, they forget to complain collectively, and I think that's what we need to do, complain collectively.
All right, have to leave it there. Can I thank you so much? It's been a pleasure talking to you.
Likewise, thanks for having me. Have a good evening.
And the same to you. Caribbean economist Marla Dukaran talking to us there from Barbados.